Precious metals have been in the news quite a bit lately, and last week we spoke to 4 experts of gold who gave us their opinion on the price of gold. Today, for a closer look at what's in store for gold and silver going forward, let's turn to Andre Knight, founder of fxknight.com. Now Andre, I understand that you're not frightened by the recent correction and that even at these high levels, you think there's still more left to this rally.
We continue to be bullish on both gold and silver going forward. As you know, precious metals are considered a safe haven in times of uncertainty. There's still plenty of that left floating around in the markets. And also they're considered a good hedge against inflation, which many experts predict will be coming in the years ahead. Unlike other safe havens, for example the Swiss franc and more recently the Japanese yen, the price of gold cannot be easily interfered with by any one entity. We've heard murmurings from both the Swiss National Bank and the Bank of Japan that if their currencies continue to remain high, that they will intervene.
And what about silver, Andre? What are your thoughts there?
Now, the media is fond of tossing around round numbers. We've heard 2,000 for gold, we've heard 50 for silver. I think both metals have a chance to exceed those numbers. Silver if it can get past 2 key resistance levels. Let me show you the charts and I'll show you exactly what I mean. Starting out with gold, let's draw a fib going all the way back to August of 2005, where this rally really took off. And I'm going to drag it all the way out to about April 1st of 2008, which is where we had our first really significant pullback into this rally. I immediately see that this fib is the best one to be using because look at how clearly the body snapped to this 50% level. Based on this 50% level, our first target would be expected to be at 161.8. And as you can see, that's exactly where we went to before we had another pullback back down. Now, as I zoom into the daily chart, you'll notice several significant things. Notice how when we came to a rest at 161.8, we once again have body snapping right to the fib level. And then as we got on top of it, same thing as we come back down to test it now as support from above. Okay? These snaps are more than mere coincidence. What they do is they validate the fib for us. And take a look at here, we've got several wicks in a row, all touching on this 161.8 fib level at 1412.52, right on the nose. It was this confirmation that led us to go in for the next segment of the rally, targeting the next fib level up, which is 200% or 1647.35. Then, at the very beginning of August, we had a very significant event, and that was the 200 broke as resistance, price came back down, touched that level as support, and again, note 2 bodies in a row closing right on that level, and immediately afterwards, the next day, we have a gap open to the upside. That tells me the other market participants, and remember, it takes lots of market participants to move the price, that they are all aware of these Fibonacci levels. Otherwise, we would not have this gap at precisely the moment that it took place. So that's the point that we added to our position. And if I extend this chart down just a little bit, you will see that our next Fibonacci target is at 261.8%, or in other words, 2027.27. Next, let's take a look at the chart for silver, and I'll show you exactly what those resistance levels are waiting. Looking at a monthly chart once again to start out, I'm going to draw a fib at the very beginning of the uptrend, once again to the highest point reached before we had a significant pullback. Again, I verify my fib, making sure we have either bodies or wicks snapping to the in-between levels. And now I'm going to zoom into the weekly chart, and I'm going to draw one more fib here, just on this last leg of the up move, again till we had a pullback. This gives us 2 sets of fibs, and we can begin to look for the confluence points. Now, zooming in on the daily chart, there's a couple things you can see here. First of all, on this most recent fib, we had a pullback once again to 50%. This gives us an anticipated target at 161.8, or in other words, 47.73. But watch out, on the way there, we also intersect a longer term fib, and that happens right at 44.81. We've actually got an intersection of 2 fib levels, the shorter term fib and the longer term fib. So I'm anticipating one resistance level at 44.81, I'm anticipating a second potential resistance level at 47.73. But like gold, silver loves round numbers. If we manage to get this high, and particularly if we break this level and come back down from above and retest it as support, chances are we'll go on to a bonus round, and that bonus round is waiting at the 200% fib or 51.13.
Thank you very much, Andre. There'll be more market analysis and financial interviews on Dukascopy TV all week, but for now, goodbye.